XRP Future Millionaire. It is 8:49 a.m. Eastern Standard Time. Last day of the trading week on Friday. A lot of stuff to go over. I want to share this real quick, let you watch a few minutes of this, get you updated on the stock market, how it closed and how it's looking for the futures. And then we're going to get into XRP. We'll get into some XDC, XLM, DGB, and also Bitcoin. I embrace you. I implore you to hit that subscribe button. Stick around for after this and pay attention to what's happening right now.
Stocks taking a leg lower here as we shake out the final trades of the day. All three of the major averages ending in the red once again. You can see the Dow off 237 points. Remember, the Dow falling on the heels of its worst day that we have seen since 2020. S&P moving to the downside, and the Nasdaq off another 0.25%. We want to break all of this down with Christian Ledoux. He's CapTrust Director of Investments. And we also have Ava Ottos, ER Shares Chief Operating Officer. Ava, let me start with you. When you take a look at today's leg lower, albeit very mild compared to the selling action that we saw yesterday, but certainly there has been a lot of fear creeping back into the market. Where do you think we're heading from here?
Well, unfortunately, there's no safe haven. When we see the news that came out of consumer discretionary and staples yesterday with Target and Walmart and Costco, that shows the struggles that companies have regardless of their size. And ironically, these are the sectors, staples and consumer discretionary, that are viewed as safe havens in a bad economic market. And so we're seeing these valuations, these retailers have appreciated tremendously over the last 2 years. In fact, Walmart and Target, on a price per earnings adjusted for growth ratio, PEG ratio, have doubled to triple the PEG ratio of NVIDIA. So these guys are way to the moon, and we will see even the conservative companies drop tremendously over the following months.
Christian, Ava says there is no safe haven. Your notes say zig when others are zagging, but towards what?
Well, look at what's not been working for a long time, and one example would be a home builder. And yes, the data now is just starting to turn down, but these are stocks that peaked almost a year ago. So we already have built in a lot of what's coming in a cyclical downturn in home building already. That's a group that can trade as low as 3.5 times earnings. And yes, you'll say those earnings are poised to decline. But this group has done a much better job since the last recession of protecting the downside. They take options on land instead of buying the land outright. And if we see a sign that rates are going to come back down as we go into maybe a recession, we could see that group gets a little bit more buying activity. We're still structurally undersupplied in homes.
And Ava, you mentioned in your notes, as we look at what's been happening with this asset bubble that we've been seeing, were we due for this correction? And is it time to buy the dip? As a lot of retail investors are wondering, is now a good time for me to come in?
Well, my advice will be to not follow the go-to stock. So we listen all the time about Apple and Amazon and Target, and these are the big companies that everyone is getting into just because we're in a recessionary market. But ironically, when you sell the Qs, when the institutions are selling the Qs, that because of their high weight in the Qs, they're the ones that drop a lot compared to the others. So I think investors have to go off the beaten path and look for opportunities and really do their homework and study the companies. And I think we might see again the retail investor making better investment decisions than the institutions, just like we saw in the pandemic, just because these are the people who actually look at companies and they just don't go to the high profile mega caps that we speak a lot on business TV.
So, Ava, I don't know if you could say specific names, but I guess when they are looking to identify some of those names, what is in that criteria?
So steady margins, and that's the tricky thing here with inflation, because you have the top line, and you have to look on both the top line and the bottom line. And as we are seeing, many companies are now struggling with SG&A costs. And you also want to see if a company in the tech sector, for example, is not profitable. You want to see sufficient cash balances that can take them through their R&D cycle, or at least to break even. So you really need to see at these cash balances there, and also profitability ideally, and of course, good growth.
Christian, in these earnings reports we've seen the last couple of days, are we seeing demand begin to wane? And if so, how does it change the job the Fed thinks they need to do?
Well, good question, because those retailers from yesterday brought up some potentially deflationary data. We saw retailers trying desperately to catch up to consumer demand by ordering a lot of goods. It took a long time to get through supply chains, but it's finally hit the store shelves. And now they're finding they have a little bit too much. So we could see a deflationary effect on some of the CPI elements coming in the future months. And if that does indeed come through, the Fed may feel a lot more comfortable going slower, or even stopping at a lower interest rate point.
Ladies and gentlemen, the Wawa Tom, son of a bitch Tom. Everybody's saying it this morning. Everybody's acting like we're gonna go up. Wawa Bob, welcome in this morning. What the hell is going on? Wawa Tom, I'm trying to stay sidelined, but all these douchebags on YouTube, they keep trying to tell me that we're going up, and I don't feel like we've hit a bottom. So what's the problem, Bob? Wawa Tom, I'm very easily influenced, and I can't make a decision. Yes, I know, Bob. So did you buy anything yet? Wawa, no. Okay, Bob, well, just listen to what I'm saying then, and just pay attention. Sometimes, being dedicated to a position in a spot where you're trying to buy in at, it shows testicular fortitude. And by doing that, you're going to have a lot more money when we get to the bottom. Wawa, Tom, I do have balls. Yes, you do, Bob. All right, Bob, can I just sing Sunny Days? Wawa, okay, Tom, thanks for the input. Ladies and gentlemen, the sunny days are here again. Oh, sunny days, oh, what a day. Oh, sunny days, oh, what a day. I wear glasses 'cause I can't see a motherfucking thing. Happy days. Oh, happy days. Oh, what a day. Oh, happy days. Oh, what a day. XRP will reign supreme. Let's just not get caught in the FUD. Oh, we're gonna crash, and we didn't. There's more to come, but we wouldn't know based on YouTube. Oh no, they think we found a bottom. What a bunch of dopes. They're gonna rope you and bend you and make you lose all your portfolio. Yeah, stay true, stay blessed. Good morning, 8:58 a.m. Eastern Standard Time on the East Coast in the United States of America. I'm T-Speaker 222 XRP Future Millionaire with the side bet on XLM and Future Digibyte. Oh, geez. So I want to thank you guys for tuning in. The more than 10,400, almost 10,500 subscribers now to the channel. The better than 264 members of Tom's Army, which I highly encourage you to join Tom's Army. Get that exclusive Telegram. Get the info right when it comes out. And if you need to talk to me one-on-one, I talk to hundreds of people one-on-one, and that is not a joke. If you need to learn more about lobster, you join my Telegram, get into Lobster Academy, and then you'll be able to trade with the big boys. So what we're looking at right now is Bitcoin. Nothing has really changed from last night. The only thing that's happening is a couple of things are trying to fall below the 20-day and the 30-minute time frame, with Bitcoin's one of them. Until we break this pattern, we have a technical move that we could break up to 31,843. That's about a 35% chance. The 65% chance we get rejected here at 31,000. and then we come to this support area and then likely fall through, because on the weekly, as you know, and we're getting closer to the end of the week now being Friday, we have this 20 crossing the 50 and we're hunting the 100 now. So this isn't good news. In fact, this is bad news disguised with a little bit of a bullish push the last couple days, which it's barely moved. XRP's at 42.3. Let's not shit ourselves here. It wasn't too long ago before everybody told me it was impossible to break 52. Now we're barely hanging on 40 cents right now. So we have an ascending triangle. We've already had 2 points. My thing is I don't know if we're going to come back up here and hit a third point. We very well might hit the third point here, break through, and then the two and a half plus year pattern, and that would leave us coming back down to 11 cents ultimately. But there are little points that we have to hit here in the shorter time frame, because we're going to have to go through a descent or a bearish cross here in the 20-day, right here in the 30-minute time frame. And right now we come under the 20-day. We're starting around the top. If the 20 comes through the 50, expect a nice little drop here. Right now the moving averages are still out of whack. The 200's right there. The 100's got to come through it. Sometimes that means we're going to straddle this area. We did break down out of this falling channel. And now if we back test this right here at 41 cents properly, 41.3, we could come up here and break this 44 cents. We already hit the technical target. That was my technical target on a breakout. We hit it 100% perfectly, if you can see the measured move. And that's why I say I'm the best in the business. We measured that move out before it happened. Now we're stuck in between an area. Does this be used as an M-topping reversal, or can we break 44.187 and get to this overhead resistance at 48 cents and ultimately 52 cents? That remains to be seen, and that's what we're tracking. XLM is the same as XRP. It started a bullish cross here, but we just came down through the 20-day. I think these are fake outs to the downside right now. It doesn't appear that these are going to break down, although if we pull down any farther on a few of these are bearish engulfing candles, and then it would pull us down to the previous support level, which ironically is way down here at 11.8, or it could be the double bottom down here, which we could measure it better. I don't know how that keeps pulling away. It's like that. So that's what we're looking at right now for XLM. Remember, we're on bearish engulfing candles on all of these for the weekly, and now the 30 minutes starting to play out that way. And these could have been fake outs to the top side, because we never did get over the 200-day. The crossing, we never finished the bullish cross. So we're watching very carefully. That could be a W formation, but this could also be the start of a breakdown for XDC. And if we do start the breakdown here, it's going to pull us way back down to here, to 0.32. It would not be a great way to start this thinly traded weekend, I'll assure you guys. If we break this, you're not going to want to be anywhere near XDC if we break this. And we're right down to the end, guys. I keep telling everybody now, as the days go on, we're down to the end of these patterns. We're going to have to make a move on these uptrends now in the immediate short term, because these are the patterns that form within a much larger pattern. So that's what you're looking for XDC. Play it appropriately. And then I'm going to leave you with DJB. My baby. Nobody loves my baby like I do. So we have support. Down here we busted the 20-day. We completed a bullish divergence here, so we're going to have to be careful now, because if we break down, our first support area would be 12, and then 1200, and then 01151 would be the ideal hit right here on the uptrend. If we break the uptrend, look out below.